Hi and welcome to this live currency strength indicator table video with me, John, on this Friday the 2nd of June. Here you can see we've got the tables in front of us and they're actually showing us some interesting developments. We've got Euro as the weakest currency against Pound and CAD, and we actually featured these two markets this week for some further short selling opportunities. So let's go take a look at those pairs. I've got Euro Pound in front of me at the moment, and we were talking about looking for short opportunities outside of this consolidation pattern. And in fact, if price broke to the downside here, we were looking for those developments to trade lower. So I'm going to show you what happened there. So if we go to our 4-hour time frame, we had that secondary close. This is where we discussed the potential for the market to pull back and continue lower or consolidate and break lower as well. So if you've taken a short position below these lows in here, you could have looked for a move to the downside. Now full targets would have been this 75 pip here. The stop loss would have been around 41 pips through there. So we could have had a really nice reward to risk ratio there for a potential move to the downside. And it looks like we're going to see that continuation here. If we go to a lower time frame, starting to see price break lower again. So Euro Pound could definitely be heading down to those key targets at the 0.8550 handle. So that's something to be focusing on there. If we get a sort of a deeper retracement on this currency pair, maybe if price comes back down or back towards these lows here, I will expect a potential rejection in around that area for a move down to the potential area of the 0.8550. Again, once price gets to that point though, we need to wait to see if the Euro Pound remains on the table. So looking for an opportunity there for further downside. EuroCAD was something we also featured going into this week for some opportunities lower. If we have a little look at the daily time frame, what we pointed out was the fact that price had traded through the 1.4650 level. It had consolidated and we were looking for the breakout for a move down to the 1.4250 area in there. So I'm looking for a continuation down to this point here of the 1.4250. We might get a nice intersection there as well with the daily 200 moving average. So price might be attracted to that area. So this is going to be one definitely to watch for some downside opportunities. If we look at the 4-hour time frame at the moment, we don't really have an entry just yet. The only entry would have came when price retested that structure there. You can see you have a nice rejection candle in here of these previous lows. So if you're in that position from watching this currency pair, then you're about 50 pips up with the potential for the market to trade down 200 and 250 pips to 240 pips to the downside. So that's a nice reward to risk ratio, considering you're looking at an 85 pip stop loss in there. The way I'll be looking at this now is I'll be looking at the lower time frames. I would be looking to identify whether price could trade back to key areas of support and resistance. So let's say this continues to roll over. Can we get another consolidation and a continuation, very much like this move in here for a continuation to the downside there. So definitely one to watch on Euro CAD. If we go and have a little look at some of the charts that we had a look at this week as well, one was Pound Aussie. Pound Aussie came into those full targets now, hitting those key areas of structure. So on the daily time frame, we were looking to target the 1.9 handle and the 1.9150 handle. Prices rallied into those levels, kind of remained within this bullish channel, and now we've rejected that 1.9150. It looks like we're going to see a bit of a rollover here as the Australian dollar starts to strengthen through there. We did look at some other markets as well. Some that didn't perform particularly well was CAD yen. Although price is moving within our favour now, we didn't manage to hold on to our position here. In fact, price came down and took us out before it went and rallied further. But that's just part and parcel of the market here at the moment. We're starting to see a lot of whipsawing, and CAD yen unfortunately took us out before a continuation. Still in a Kiwi dollar short here, still looking for opportunities to the downside. Our stop loss is up at 161.67, looking for price to continue to the downside here. If you looked at the original stop, you would have been stopped on the first if you went with the aggressive stop loss. If you went with the less aggressive stop loss like we did, we're still in this at 61.67. So looking to see if price will reject here and see if we get that dollar strength coming back into the market for a continuation, which may happen today considering that we do have non-farm payroll up and coming today. So it's going to be, again, another sort of choppy market. So maybe it's one of those days, again, being Fridays, we don't typically want to jump in too much on a Friday, but we'll see how this one performs after the end of today. But like I said, lots of positives this week, a couple of negatives, but unfortunately that's part and parcel of the trading business. And I hope you enjoyed all the content this week. I look forward to speaking to you in the next one.